Hey guys, I am back with two markers today, and I want to show you a simple investment process. There's a lot more to this, but I wanted to make it more simple, and I really wanted to talk about step 3 today. Step 1, anytime you do an investment, and again, I'm going to fly through this, is determining how risky we want to be with that investment. So typically, if it's a very short-term investment, let's say we want to buy a boat next month or we're buying a house in 2 years, we want to be more safe with that investment because we don't want to lose half of it, right? The longer term investments, maybe for retirement or long-term planning, maybe we could be a little bit more risky, okay? So we determine the risk tolerance first. The second part is then invest those assets accordingly, okay? Third, and often overlooked, and I do get questions about this, is rebalancing. The video today is, what is rebalancing, okay? So let's say we've gone through these steps and we've determined that we need to be in a 50-50 pie chart. 50%, let's call it stocks or equities, and 50% in the safe stuff, okay? What happens over time though? We set that up, it's 50% here, 50% here. Markets change. Things grow in different patterns, okay? So where we started 50-50, maybe a year, 2 years, 3 years from now, we see that the 50%, let's call it the orange side, has grown, and maybe now it's 75%, leaving only 25% on this side. We're not 50-50 anymore. We are no longer in alignment with how we wanted to invest and what our risk tolerance was. So what do? We rebalance, and we do this on a systematic basis, okay? And most financial advisors and asset managers will take care of this for you. Systematically, what are we doing here? We actually would sell off 25% here, right? To bring that back down to 50, and it adds 25% here. So that brings our portfolio back to 50-50, or the original goal, okay? What this is doing is actually, in most cases, it's selling this one when it's high and buying the other piece when it's low, okay? Or it could be the other way around. But in any case, you want to make sure that your risk tolerance is set, we're invested appropriately for that goal, and then we are rebalancing on a systematic basis. And normally, folks do that quarterly, semi-annual, or annual, and we don't mess with that. We don't want to take emotions into play and say, let it run. Sometimes there are reasons to let it go and let it keep growing. Most of the time, and in most cases, we want to make sure that we're rebalancing systematically. So that is what rebalancing is, folks. If you have any questions, reach out.